All right, GM everyone. Welcome again to another session from the Kiro guys and the Kiro crew. Together, we got an amazing panelist today. We're going to be talking NFT lending and the evolution of NFTFi. There's a big trend of calling anything with Fi behind it. NFTFi is one of them, but it's been actually quite a while already. But happy to have you all here. We're going to do a small round of intros. We've got an amazing set of builders here that have been really established themselves as OGs in the NFT space. And we've got a nice crew here from the Kiro gang as well, as we've been pretty active when it comes to liquidity, and we'd love to share our insights. So today I'll be moderating. My name is Stef. I've been in crypto for the last 10 years, been at Kiro for the last 7, and got an absolute passion for gen arts. I've been a pretty active collector during the art block days, and personal investor into quite a few NFT applications, including Gem, which ended up being OpenSea Pro. And I'm super happy to have all of you guys here today. So we'll just do a short round of intro, and then we're going to dive straight in. The topic will be liquidity and innovation within the NFTFi space. So maybe we'll start with Jake.
Yep, thank you so much for having me. I'm Jake, CLO at Mintify. I guess a little bit of background on myself. Got into trading initially in traditional markets. Did a lot there before I really found my way into crypto in later 2017. You know how that goes. I joined pretty much as everything was like dying off for at that part of the cycle. So a really great time to join in. But it actually at the end of the day, it really was lots of great experiences joining in the middle of a bear. And having that be your first crypto experience. Moved into NFTs, and it was really an easy takeaway from there. I'm a big music memorabilia collector, so I have a physical collection, and it was it really did touch home, having the tie-in between rarity and things that drive an emotional connection in terms of items that I appreciate. And the real difference there was just whether it's physical or whether it's digital. And of course some projects are really mashing up the two of them, where you get a physical and you get a digital. But really, the whole idea of collecting things that you appreciate and that you resonate with, tied in with my my analytical background from trad and crypto, it really made NFTs quite a nice match. And as for Mintify, Mintify is doing a whole lot of stuff. Right now we have our of course NFT products. Very soon we'll have token trading products as well. Lots of different analytics, cross-chain interactions. A big goal of ours is to really create the best place to trade on-chain assets across any chain with any currency. But yeah, that's the intro for me. Thank you guys. Looking forward to this conversation.
Thanks, Jake. We'll maybe go to the Gondi guys. We've got 2 co-founders here. Maybe start with E.
Here we go. Sorry about that. Cool. So yeah, I'm E, one of the founders of Gondi. I guess before this, I come from a more traditional tech background. I spent some time at Palantir working in the machine learning team. I was there for 3 years working on a variety of projects. I guess come late 2016, early 2017, I started digging a little bit more into crypto. I guess at that point, crypto was really BTC and ETH. And a few months later, basically quit Palantir and went full in. Between 2017, I guess, until 2022, I ran a prop shop doing high-frequency trading, mainly focused on perpetuals. So trading from BitMEX and Deribit early on to Binance and Huobi later. And Burga and I, we've known each other for a very long time. It seemed like finally it was the right time and right space. And we had been dabbling a little bit with NFTs, a little bit with lending as well. And we thought that we could bring something new to the market. And that's when we started building Gondi, which today is the largest NFT lending protocol. And we'll continue building. We launched a few new features around buying and selling as well. And we want to basically attack the full stack.
Nice, thanks. Burga, how do you guys meet? Maybe share that one right now that we know Gondi.
Absolutely. So first of all, thank you for having me, guys. It's great to be here. So the way Ian and I met was we're both Argentinians, but we came to the US for undergrad, for college, and it's actually not something very common for people in Argentina. So there's actually just a couple of advisors in Buenos Aires who actually help you navigate through a process and like find out what an SAT is or like how you actually need to fill out your application and whatnot. And pretty much like we're applying to the same types of colleges, and this person put us in touch, and we became friends ever since. And we've known each other for I believe about 15, 16 years now. So a long time. And yeah, I guess like just like very quickly on my background, yeah, I've also been building and investing in tech, more Web 2 for the better part of the last decade. Built a VC fund that grew to about $1 billion in AUM. Built a couple of other companies that I sold in the Web 2 space. And then, yeah, after selling my last company, I took a sabbatical and I started playing with NFTs, collecting NFTs. I've always loved collecting stuff when I was a little kid. And that's when, Ian and I started playing with a few stuff and just like thinking about ideas to push the space forward, and that's how Gondi came together.
Awesome. Thanks, guys. Now we also got Danny from our team, who's been the actual incredible power users of almost every platform out there. So Danny, short intro, and then we're going to dive straight in.
Yeah, sure. So I'm the head of Keyrock's exotic lending and borrowing desk. That started originally actually being GameFi related, looking for utility-based NFTs and seeing how we could leverage that. Then it switched out into everything to do with sort of gen art specifically, looking at kind of the more stable markets, and then fully going into everything involved with NFTs, all chains, all platforms, and where we're now some of the largest providers of Solana, Bitcoin, and Dollar. Maybe not so much Ethereum, but in those three for sure, across all of the markets pretty much.
Awesome. Thanks. So what's interesting is that actually quite a few of us come from like a trading background, etc., which means that liquidity as a concept is something that we're all very much aware of, and also very much, value, as it's something that allows for the exchange of assets. As Jake is, I know you're going to have to leave in about 20, 25 minutes. So I really want to focus a lot on, let's say, secondary markets, especially on the trading sites. And then later on in the conversation, dive a lot into the, let's say, credit and debt markets that we're going to be looking and seeing what we're doing in Gondi. But when you think about the liquidity, I still remember the good old days with OpenSea when, API rate limits weren't there and people were actually like mass bidding and, doing real algorithmic liquidity provisioning, and then became something that they stopped doing. But share maybe a bit of your perspective, like how have you seen liquidity evolve over time, especially with Blur and OpenSea now Pro launching all these incentive mechanisms? Like how have you experienced it yourself, and how you think it's going to evolve now in the next few years?
Yeah, sure. So I mean, we definitely saw it starting off like even more speculative than than it led to. With the Blur token and everything going on with OS2. People were speculating on the underlying, you know what I mean? On the actual NFTs themselves, like incredibly, and that's what led to the absolutely ridiculous run up for lots of different collections. Dozens and dozens of ETH in floor value for like 5,000-10,000 supply collections. A lot of that liquidity was, I mean, I'd argue that's a little bit more organic. Then it started to transition into the incentivized liquidity, which isn't inherently a bad thing. I believe, Mintify as a whole definitely believes that liquidity is valuable, regardless of the market that it's in. It's the way that, you're incentivizing and drawing those users in to interact and deploy liquidity, and, what kind of risk that they're taking on. Is it based on speculative risk, or can they define a dollar value behind that risk, so that they can manage the risk? There's lots of different elements to it. But we've definitely seen more of the, degenerate side of incentive systems for providing liquidity, where a lot of the time the liquidity providers have to take on, large risk, part of which is unknown because it relies on the token compensating their losses. And that's what drives a lot of volatility, because when people are uncertain, once that certainty hits, they're going to make their decisions, and it's going to affect the market, and people are going to see it in the market. So I definitely think that being that liquidity is important. There will be lots of incentive systems that actually do work in the sense that they correctly incentivize people to provide liquidity without, I wouldn't say forcing, but enticing them to take on more risk than they should. And that should result in something more similar to that which we see in like traditional markets, or even crypto like sexes, where you can get like rebates on trades for being makers and stuff like that. Things that have definitive value. You know what I mean? That people can say, I could put on this much risk because I know I'm getting this much in return, versus speculating on what they're going to be getting in return. So yeah, incentives. I mean, generally speaking, in NFTs, they haven't been great. Of course, they've been rewarding. I think that they've probably been, rewarding versus forcing people to take losses for a smaller group of people. The people that are more sophisticated, using automated strategies, things that can more dynamically manage risk in like super uncertain markets. But there's also a lot more coming. I mean, I know at Mintify we're actually working on a couple additions to our incentive systems that rebalance a little bit, still valuing liquidity from liquidity providers, but putting a little bit more focus, or I guess shifting some more focus onto collectors, creators, and builders. So there's a whole bunch there, but you can definitely expect some big updates from Mintify in that regard. Also in the realm of alternative incentive systems that are detached from the primary incentive system, but do provide a definitive value to liquidity. Can't share too much there, but I think that's very important for this market, especially because it's already a very speculative market. Having some form of certainty in terms of the value that they're getting in return for their provided liquidity would definitely reduce a lot of the volatility and violence that you see on the market when those realizations do come to fruition. But that's my thought. I mean, it's been crazy. I think there's a big evolution coming. I think it's already taking place, and we're not going to see liquidity provider incentives completely go away. And that's a good thing. Liquidity is always incentive. I mean,
all the time, right? It's always like a risk-reward ratio, opportunity cost of capital, and all kind of stuff. Now, I do want to double-click on something, and I'm also going to ask the Gondi guys and also Danny to chime in. Is that when it comes to providing liquidity and being on both sides of the book, we know better than most as a market maker that you need to be really good at being able to define what the underlying value is, right? Like, what is your fair price for something? I think one of the trickiest part about NFTs is how do you value a specific NFT and how do you manage risk, right? We have the concept of floors, which I'm not a huge fan of, right? And I think there's lots of drama around it when it comes to collectors and what you see on Twitter, etc. But being able to define the mid price is essential for liquidity provisioning. So how do you, maybe to the Gondi guys, right? Like, price definition is something that is not only your bread and butter and how much you guys, at least facilitate price discovery, but what is your input on like how important price definition is and value definition is when it comes to liquidity?
Sure, I can take a first stab there. So I think, given the liquidity and number of transactions that most of these assets have, most of these NFTs have, it really is more of an art than pure science, I would say. And this is like even like coming from like the opposite end of the spectrum when we're like doing NFT and like most of my, I guess, like previous career. But things that people like ourselves and like other underwriters I would usually look at is, I don't love the concept of floors when evaluating what to buy or like how to evaluate the pieces from like, let's say, like creative angle. But when it comes down to like underwriting the price of something for a lender and knowing how much they'll be able to get for, that's usually a good indicator, because that's like where like if you take like any collection, that's where most of the liquidity will be. So we'll have like certain kind of like stability that one can evaluate. And then usually as you move, I would say along the like rarity range, you would usually start like pricing things based on some multiplier to that floor together with some like past transactions. But again, like these past transactions, in some cases you will only see maybe like a couple in the past half a year, like 6 months or like even like 12 months. And one interesting bit there that actually like burga like noticed a few days ago is that actually the number of transactions right now that we're seeing in some of these collections for loans is much larger than that of sales. So if you take like the case of like autoglyphs or like even like squiggles for the, let's say, like last 30 days or so, you actually have like more loans initiated, which I'm curious how that actually, like, I don't have an answer here, but I'm curious how that will, like, how these like factors will influence price discovery for these, for kind of like for like these pieces in the future. I'm happy to pass it along to Burga or like anyone else if they want to add color to this.
Yeah, I guess one interesting thing to note, at least in the lending market, is there's a lot of fragmentation and specialization on the lender side. I think that's one thing that most borrowers or most users aren't aware of. And lenders are very specific in terms of what they want to lend against, and therefore how they price specific items. And it's, again, like, very similar to the secondary market, where there are people who only like to collect GenR, there are people who only like punks, there are people who like PFPs, there are people who like all of them. There are people who only like great, like you name it. And I think that in the lending market, we see the same things, where there are lenders who only like to lend ETH against punks up to 90 days. That's it. We have other lenders who also like to lend ETH against punks, maybe up to 120 days. Then we have lenders who only do USDC. We have lenders who only do USDC, apes, and gray. Like, you get like all of these like weird combinations. So whenever a borrower comes to Gondi, they get a bunch of offers, and they see, okay, like, why do these offers don't make sense? And we're like, okay, these are different lenders who have different parameters, who have different ways to underwriting the risk. So I think like that's an interesting thing to see, because the way people are pricing these items are completely different, and they also have very different criteria and restrictions when it comes to what are the things that they want to underwrite. And at the end of the day, that's healthy, because the people who are underwriting against these specific collections or items or like subsets or like, you know, time and currency, presumably know what they're doing and will be more successful than if they underwrite against the whole market.
You mentioned that pricing is an art form, right? And finding value, and it's hard to do it in a systematic way. Danny, I know that you guys have built internally like a model to price NFTs. Do you agree? Is it an art form, or have you guys figured out something that is a bit more systematic?
No, so it's definitely art. I mean, the lower liquidity an asset is, the more art is to trade than science. That's just how it is for every sort of asset. But what we've done is, well, at least what we've done at Keyrock, is a way to create a system where the model will give you a valuation that we use as more of a compass. Okay, it's not like a truth, it's not a law that it's given you. It gives a compass to the trader. What the model will also do is flag discretionary things that we feel that the trader should look at the hand. When the trader has that value as a compass, what they can then do is use their trading knowledge to try and do some amount of future prediction, obviously. So the model doesn't care about what the value might be in the future. It cares about what the value is today based on the past. One of the big differentiators for us is, because we're active in both the trading and the lending and borrowing markets, is we use both money market data and secondary sales data to be able to fill in more gaps. So we basically just get a lot more data points than someone who's looking at one particular thing. And because we've been in the market a long time now, we're able to price discover correctly things like a hoodie, punk. They have varying, they're like a sub-market of punks themselves, so you have to understand that as a start. Then if you were only going to look at secondary sales, you'd see, why is no one buying these? These are going to be awful to, like, if I get one of these as a default, you might be thinking it's going to be terrible to sell. But actually what you realize is that the people that own them absolutely do not want to sell them. So when you start including money market data, you actually start seeing price settlement of what the actual value of those things are, because there's multiple lenders. They're all roughly doing at least entry level 50% LTV, but as the Gondi guys have said, depending, the different lenders will have different risk parameters. So you can start seeing, okay, this is actually what the money markets are valuing these things at, because we know if we default on them, we can probably sell them for more than what they default at. So that's an interesting point in terms of valuation there. The other interesting thing as well, in terms of what you've been talking about in liquidity, is that it seems on trading markets, getting the underlying liquidity is much harder to stick around. What I mean by that is getting the people with the dollar, the ETH, the Solana, the Bitcoin, the whatever, to buy the NFTs is harder. Whereas the inverse is true for lending and borrowing platforms. They would be more constrained by the people that actually want to lend the NFTs themselves, right? They're more constrained by that side, which is kind of odd to me, that not many people are wanting to buy them, but yet not many people are wanting to actually lend against them as well at the same point. right? It's a juxtaposition of what's happening in the market. We also see that most NFTs only actually do a maximum of about a 4 wallet rotation. That means from mint, probably that person sold it because it's gone up. The second buy is a speculation buy, and the third buy is either a speculation buy or they want it, right? So actually NFTs don't go very far, even if there's active markets on them. It's very, very strange in that regard, even on what we would quote floors, in this regard. So it's a bit of a weird one that liquidity is hard on trading, but yet people don't want to borrow them. I guess I would also close that there was an interesting post recently that I think only 4,000 punks out of the 10,000 are being used in liquidity markets or like lending and borrowing, right? So what are the 6,000 other doing? There's money on the table because everyone in the world wants to lend against a punk, or many, many people would buy them. So I think a lot of people honestly don't know, or they're just kind of a bit scared maybe to interact with them. So more education on what sort of these things do. Lending and borrowing markets automatically create utility for every single NFT, which is why I was drawn to them as we entered with GameFi, like I said. So I think this is interesting.
Awesome, Danny. This is great. Super inspiring as well. Geez, you should be talking more about lending. When you talk about lending, like in the end of the day, you start creating some sort of like a derivatives markets, right? In the past, we saw the guys like Wasabi trying to build really out derivatives markets. What's your opinion, Jake? Like, how do you see derivatives markets evolve when it comes to NFTs? Do you think there's a future? Do you see that perps will be dominating? Do you think options will be something that is relevant, or is it too complex?
I think they'll probably always exist for them. Generally speaking, markets tend to, shift towards optimization. You know what I mean? So I do think that they will probably always have a place in it, in terms of managing liquidity and arbitrage and, just speculating generally. And with that, yeah, I mean, I'm sure that it'll also increase in like demand. I don't think that it's going to. No, I was going to say I don't think it's going to scale proportionally, but it very well might. It's hard to say. For instance, like I think options might be more valuable or more interesting to people to hedge against their spot holdings of like say they hold a CryptoPunk and it's like a 50 ETH for, you know what I mean, and they want to be able to hedge against just in case something does happen. That's a great option. Especially because each asset is what, like $200,000 or something like that. So it's not like you have like the wiggle room of like cutting half your losses or something like that. Like it's either you take your loss or you don't. So yeah, I do think that derivatives will always have a place. I'm not sure if like they're going to increase disproportionately to like the appreciation of spot activity, just because of like. NFTs being more of a collectible thing, they're very limited in supply. Is it really of interest to people to trade like fractions of those NFTs? I mean, we've seen interest of it. There are, of course, like platforms that offer that. Haven't seen them taking over any like large percentage of the value market share. I don't believe, though, in terms of like versus spot. Maybe that's just a symptom of not hitting exactly what people need in terms of activating that liquidity. But I think being that it is more of a collectibles market, it has lower supply, it's less liquid generally. I think a lot of that stuff's going to happen on the spot market, in the actual spot order books. But definitely like derivatives, I don't see any reason why their importance would be disproportionately decreased from the growth of spot and whatnot. But
interesting you mentioned fractionalization. I remember that I was experimenting to be some sort of like a floor market maker with PFPs at the time with NFT 20, and it actually is something that just relates to floors, right? It's very hard to start fractionalizing real collectibles, so it's an interesting point you make there. I mean, Danny, you got an opinion on this one as well, right? Like, do you think there's a future in fractionalizing NFTs?
No, because I think this is the philosophy on people that really do enjoy the art value of the NFT in this situation. Art if we look at more traditional sales now and we remove the digital aspect, provenance of a piece is very important, where it came from, the story of the piece, of why it has value in the first place. And secondly, if I would like to own a piece of art, I want to own the piece of art. I don't want to own a piece of the art. This actually was a protocol quite a long time ago, and like a DAO type community bought a Banksy, and it was then fractionalized between the community, and they all thought, fantastic, we bought a Banksy, everyone loves Banksy, we'll be able to trade these pieces of Banksy. And then you just think, who wants a little piece of the Banksy? If I want to put a Banksy up in my house and I want to go to those lengths, I'll print one out, right? Like at that point, what am I doing? I'm not going to print out a tiny 100th piece of a Banksy. That's ridiculous. Doesn't make any sense. So I think it's kind of missing the point of the actual philosophy of art in that point, and trying to create a market for a problem that doesn't even exist, really.
So really creating liquidity, but in a almost like a unsophisticated way, which doesn't work. Mm-hmm. When we think about NFTs, and we talked a bit about PFPs. We tried to arb that stuff in the past, etc. But I hear the word Gen Art a lot. Maybe the Gondi guys, like, what are you guys seeing when it comes to liquidity for different NFT types, and do you see this evolve into a specific direction?
Yeah, so I'll take that. I think one of the things that has been interesting to see is that the evolution of the types of lenders over the last year. Obviously, we work with you guys, and you're a very sophisticated underwriter and lender. But more and more over the last 3-4 months, we start seeing a lot more institutional funds or small funds getting in the scene. I think that's actually very good for the market. Like, if you were to just like rewind 2-3 years in the NFT space, you would get to see a lot of loans at 100% APR, 200% APR, many defaults in the money. And it was like literally the wild west. And I think what we're seeing right now is because like the lending markets for NFTs, particularly the more valuable ones, let's say like Xcopy, Punks, Lost Rubies, Squiggles, whatnot, are starting to behave a lot closer to traditional finance when it comes to like underwriting parameters, when it comes to the discipline of lenders, the actual APRs that they are setting. So it's very interesting to see how there's a lot more I guess like professional things are becoming a lot more professional on the lender side, and also providing a lot more liquidity as well.
Nice. When you saw, Jake, I know you probably have to leave pretty soon, so I just want to have like maybe an ending, like visionary statement from your end. Like what we saw like a few months ago, or actually a few weeks ago, with Mega ETH launching their NFT collection, and actually translated into some sort of like an equity position into the underlying protocol. It's a novel way of a novel new approach to actually use case for NFTs. Do you see like a specific trend emerge that is going to be different from like the PFP and the art side of things, actually even like the in-game items that you think is exciting? And if not, is there any other, let's say, evolution that you're super excited for with Mintify that you really want to double click on or really dive into?
Yeah, well, I mean, I think we're only going to keep seeing new ways of using NFTs come about. I mean, I'm sure there's an absolutely ridiculous number of ways to use NFTs, some of which that are already being used. I mean, I'd be very excited to see it be used in such a way that, like the user doesn't really have to know that they're using NFTs. You know what I mean? That it's being used because it makes sense to use it, and that it doesn't impact the user experience at all. And that really is like a lot of what we're doing in Mintify. But I mean, what else am I very excited for in terms of NFT use cases? I think it'll be amazing to see like a real AAA game that actually breaks into attention that is using NFTs. And again, like the players don't have to know that they're interacting with NFTs. Sure, like their knowledge of it unlocks even more use cases for it, like being able to take those items to other games or be able to trade them permissionlessly, peer to peer, whatever it might be. I think that's incredibly valuable, and I think there's like a weird like perspective from normie gamers that NFTs are bad, when in reality they're already using like the same systems that NFTs use, except completely centralized, and like all of the power is taken out of their hands. So I think that'll be massive. I mean, we know that obviously gaming is a tremendous spend globally. Like there's so much money absolutely poured into gaming. So I can see a lot of success coming out, and I'm sure it's going to happen. It's a matter of when, not if. Beyond that, I mean, I really like the idea of RWAs. I think things like precious metals and whatnot are really cool. I think things like even putting homes on the blockchain. Maybe there are better ways of going about it. But it's neat to be able to be like, this is verifiably, like, this is the deed to my house. Like, you know what I mean? Like, I own it. You can verify that it's in my wallet. You don't have to take my word that I hold, a piece of paper or whatever it might be. Beyond that, yeah, I mean, supply chain management is an interesting, one to think about. I know that there's already companies doing it. I forget what it's called. But another one, I just saw a picture of like a can of tomato sauce that had a QR code to verify that it was, on chain, to verify that it was a real, can of tomato sauce. It's not terribly exciting for the consumer, but it is a real use case. You know what I mean? That doesn't really apply to like.
Start to figure it out. It's good.
Yeah. No, but I think gaming. I think programmatic NFTs. I think AI is going to be huge. I think delegating access to things through the form of NFTs is a really great idea. At the end of the day, it's going to get crazy, and I'm sure there's going to be lots of ways that people are using NFTs that the end user has absolutely no idea. And really quick, as for Mintify, yeah, I mean, we're building the best place to trade on chain. I mean, I know I already said that, but that goes from NFTs to fungible tokens to any other kind of asset class that you'd expect to be, on chain, or even ones that you don't expect to be on chain. Across any chain with any currency, being able to create very streamlined and beautiful and enjoyable experiences, not just for the user, but for builders to be able to leverage our tech and create experience of their own. But yeah, I do have to hop. I really, really, really want to thank everybody for having us. I know you're going to keep on going with the space, so I'm definitely, have a great rest of your conversation. I know I'm going to listen to it as soon as I'm done with this meeting. But thank you so much. Yeah, check out Mintify, check out Keyrock, check out Gondi, check out everybody going on in this call right now. Awesome products all around, and thank you.
Thanks, Jake. Have a good one.
Thanks, Jake.
So when you're thinking about gen art and or at least art NFTs, the Gondi guys have been connected with both, big lenders, big collectors, etc. There's this interesting new trend emerging in the last few years. I wouldn't per se call it a trend, but like traditional auction houses and traditional art collectors are also trying to, or picking up. Let's put it that way. There was been a few Sotheby's auctions, and Sotheby's actually has that dedicated, digital assets team. Big Gondi, like, what's your opinion on traditional auction houses coming in? Do you feel like it's an enabler of liquidity? Do you feel it's a naive way of approaching liquidity? Is it old school? Is it new school? What are your thoughts? I'll maybe give the word to E.
Sure. So we've seen this happening over it's been a few years now that they've been dominating the space. I wouldn't call it revolutionary, but they do have access. I mean, there's a pretty meaningful subset of people that they can onboard. How long it takes, how does that exactly look like? We'll see. But we definitely don't have anything against it. We're all for it. I don't think the space right now has a problem of being overcrowded. So I think we should welcome with open arms everyone who has, I would say, a legitimate interest in the space. And they're a great channel for that. I guess for Gondi, we've been working closely with some of the big auction houses that everyone knows, trying to help some of these either new or existing owners of NFTs to get access to liquidity before they execute some of these purchases. So if they were looking, let's say, for Fidenza, they would know that right after the purchase, they would have access to some amount of capital through the form of a loan at Gondi. And we've seen that has worked pretty well. It's still very manual. I'd say that like in the future, all of these could be done in a single transaction on chain, and there is not so much friction. But it's just getting started. I think that it's by no means a bad sign that we're not there yet.
Yeah, and maybe just to add, maybe just to add something in there. I think when it comes to collectibles or art, like distribution is everything. And I think like in traditional art, you have museums, auction houses, but then you have also a lot of galleries, and obviously having everything on chain, globally accessible to everyone, has completely disrupted the model of smaller galleries. And I think we've seen many players in our space try to build different models with different incentives, and some with more success than others, but we haven't seen anyone pulling that off very successfully. And I think what's interesting to me is that both Sotheby's and Christie's, some of the large auction houses, have been pretty good at emulating the same success that they've had in traditional art with NFTs and I guess digital art. So it's, as Eve mentioned, I mean, it's very good to see them come into a space and also get more distribution and help the artist reach, I guess, new audiences as well.
Maybe double clicking on that one, because distribution is indeed key, and also the way to possibly enjoy art is something that is often overlooked. There's lots of challenges there. Like the fact that I have like a print of an NFT here in the back is almost a bit of an odd thing to think about. Although I enjoy it, why would you have like a physical representation of something that is digital? Do you guys have any ideas, or do you see any trends that could be useful? Is it technology that needs to pick up, or are there more platforms that we need to focus on it? What do you think is key for better distribution and enjoyment of these art pieces?
I think it's a combination of everything that you mentioned. I think the fact that like people enjoy art and these assets in very different ways, right? And I think maybe just going back to the different protocols that we're trying to build fractionalized solutions for NFTs, I think they were trying to sell a solution to the wrong audience, right? So, for example, like when you look at traditional art, you have very successful companies like Masterworks, where someone cannot buy a Picasso or a Banksy, but you want to ride that asset, and you want to get the asset appreciation. So you can actually go to companies like Masterworks, invest like 50K, 100K, and then you get that yearly appreciation. Now, the person who's like buying the art and living and breathing art and going to the galleries is very different than the person who's actually just buying a fraction of the NFT for the appreciation of the underlying asset. And I wouldn't be surprised if we actually start seeing different companies offering this type of experience against punks, for example, right? Where like people might be very bullish on punks over the next decade, or squiggles or autoglyphs, but then I don't see the value in offering that service to people who are online, on chain every single day, because I think one of the biggest value props of NFTs is community, right? Like I see three core pillars here, right? Like one is the art itself, two, the financial part of it that Danny said very well. Like once you can access liquidity against your NFTs, you're providing utility to every single NFT. But the third part is community. And I think many people on this call and many people who are listening to us have met dozens of friends and amazing people all around the world just because they collect the same things, right? And like you might love having the print meridian behind your wall, but then you also know other people who appreciate that art. Then you connect with them and you talk about the same things. And some of the communities that I've seen in the NFT space are the strongest communities I've seen in my life, period. I don't think there's a stronger community on any realm than the CryptoPunks community, for example.
It's true. I actually agree. Like I've been in crypto for a while now, and trends come and go and communities come and go. But if you think about it, like all four of us actually are in Grailers, like Grailers DAO, which is like a big collective or collectors group. And and it's still super active. Like some people might believe, we're in a bit of a bear market when it comes to NFTs, but the interaction there and the continuous conversation around art is really great to see, and it's really energizing. So I agree actually. I think I definitely agree. Danny, you mentioned earlier that of the 10,000 punks, there's a big part of them that are just sitting there and doing nothing. I can imagine that, given the nature of these collectors being, crypto G's, that any type of interaction with a smart contract or any type of interaction that is outside of cold storage is something they're not always super comfortable with. What do you think are like the biggest challenges when it comes to having these high value art pieces or high value NFTs interact with tools like Gondi? What do you think is a big blocker, and what should we do to try to solve that?
Well, I think it's more just maybe education of how the platforms work. A lot of people don't really take the time to be able to be educated on why these work and why things are safe and why you don't have to worry about like a smart contract can't be like tampered with, and like don't worry, someone's not going to hack it and tamper with it because you can't do that anyway. Like these sort of things, right? The basics. Obviously, some people have got burnt. I mean, those CryptoPunks are not the V1 CryptoPunks, are they? There's a whole different market for those things. So yeah, I understand where maybe that fear comes from. So you asked a question at the end of like, does tech need to change to help anything like this? And you've also mentioned like different categories of NFTs, PFPs, gaming, and Gen Art that you've said. So if we take it from the perspective of a trader, how we view this and how we want to provide liquidity is curious. So rather than categorizing the collections into, say, Gen Art, GameFi, and NFT, we would sooner categorize the type of buyers or traders of those types of NFTs and what are the characteristics or philosophies of the people that own those type of NFTs, right? With that, then you can start understanding more from the art and esoteric side of why something with lower liquidity might actually be safer to lend into than something with high liquidity. Because whilst it might have high liquidity, it might be highly, highly volatile. And in particular of a lending market, I would rather stability over volatility because that would be a better trade for me in that example, right? So when you start categorizing like that, it becomes very interesting that you start seeing traditional art. So things like Sotheby's, the technology, I think, isn't really changing anything except for the fact that they removed the trust aspect of the deal itself. If the money's there, it's going to be there. But the trust is still always required. And in trading, it's almost the most important value that you can have between yourself and a counterparty. If you trust each other, you can get a hell of a lot done, right? So I don't think that the trust aspect is ever going to go away. Therefore, the technology side of this is probably the least important thing. It's the trust of being able to use the technology that it says that it does what it is, and then it's the trust that is the counterparty going to do what they say that they're actually going to do, and we believe that these values that we've said are true, because I have to trust that they're not just going to use me as a short, and they have to trust that I'm not just going to use them to try and gouge them out of a horrible premium or something like this, or give them nothing, So that will never have to go away, which is why I think it's important when you have companies like Keyrock. I mean, you've got trust by the name. Just that gives you the idea of trust. So I think the story of that is more important, and that brings the liquidity, because the trust begets the liquidity in that regard. So I think in that regard, technology is not going to help. It's the understanding of why the technology is there, which equals trust.
Okay. And Burga, we got like a Telegram chat running with Mac, who's been amazing when it comes to interacting with us and sharing opportunities. Like there's thousands of messages in there, right? So you guys must have so many conversations with big lenders, and trying to convince them is probably not always easy. Like, do you agree that the trust factor is like the biggest blocker for them to interact on chain, or do you see any other challenges there?
So I think that trust is definitely a factor. Early on, I would say it was even more so. I mean, like when we launched and we had maybe only like a couple 100,000 in outstanding debt, then even though our contracts were audited by the top tier auditing firms, even though we offer insurance, I think that a lot of the lenders that came on board at that point really came on board after like having conversations with us and know that there were, I would say, like real people behind this. And then as I guess like the protocol grew and the market evolved a bit, we found that that trust component has became, I wouldn't say necessarily like not relevant, but definitely less relevant than early on. We still have, I think, like a problem, or like I would say like today, the limiting factor for lenders at least is just like awareness. Because if I tell you, hey, like you have like a CryptoPunk, you can be lending at like some like 60%, let's say like LTV, and generate yields anywhere between like 15 to 20%. Anyone who knows like any like fixed income like market, they know that this is actually like pretty great. You like on like a risk adjusted basis, getting 15 to 20% on those LTVs on like relatively short term durations on punks sounds amazing. The problem is that many people out there, again, it's still very niche. There are not that many people. And going back to what we mentioned before, even though we talk about like the like NFT lending market, there are actually like multiple markets. Like, right? I mean, like there's like as mentioned before, there's like the USDC market, the ETH market, there's like the CryptoPunks market, the Gen market. And on the lending side, that's incredibly fragmented. And I think like a lot of it is just like because of awareness and just like or like lack of like knowledge around like some of these collections. We are making a push ourselves to help with that. I think like a barrier there is that, I mean, this is P2P, which means that the capital provider and underwriter is the same player. You need to have the capital and the knowledge to be able to participate in this. That's not really the case in any mature asset class. It's not like you have like a bunch of like cowboys like going and like I don't know like giving you credit against your house or like giving you like credit against your like car or like leases and whatnot. So I mean we think as the market matures, having some kind of separation between these roles in which you can have an underwriter that can operate within some constraints and then people who are just like yield seeking but they don't know as much about NFTs, they can just like let's say like deposit capital there. And we think that through these like kind of improvements and new products, the market can become more efficient, and we can onboard like new capital into the space. Not everyone needs to be like a savant like Danny or you guys in general to be able to participate. Or I guess like put like let's say like money to work in this sector.
Mm-hmm. Maybe burga, like because if you think about keeping liquidity on specific platforms or interacting with people, you're always going to be thinking about also expanding almost your service or your products. Like you guys went live like a few weeks ago, if I remember correctly, with you're also the capacity to sell and to look at sell NFTs for paybacks of loans, etc. Which was great and innovative, and it's really been quite a popular already use case of expanding your product suites. What do you think are like the other things you guys are working on, if you can already say, that will allow for more and more product and service to be developed on top of Gondi?
Yeah, absolutely. So when we launched Sell and Repay, I mean, like we started building that because our users were asking for that solution, and I think it's been great to see that a few days after launching, we had the floors for gritters, squiggles, and autoglyphs on Gondi, right? So if you wanted to buy one of those items, like the cheapest listed items were not on Blur or OpenSea, they were actually on Gondi. And what we're building is what we're doing now is continue to build that suite that gives users more flexibility. So as of right now, you can only list your items for sale once they are in used as collateral. What we're also going to be releasing very soon is the ability for people to make buy offers against those listings and against any item which is used in escrow. So that should bring a lot more liquidity and a lot more flexibility to both buyers and sellers. And we can't comment that much in terms of like other things that we're building, but one hint that we'll share with you guys is, as you mentioned, lending right now requires a lot of work and a lot of knowledge on the lender side, while at the same time lenders are getting very good risk-adjusted returns. We want to make that experience more accessible and easier for more people on chain. So that's another product that we're working on, but we're still, I'd say, like a few weeks or a couple of months away from launching that.
Nice. Exciting. Danny, you're a power user as close to anything that relates to NFTs. What's for you like the most exciting thing you're looking at right now, and where do you think people will start going towards in the next few months?
Well, I'm just curious if AI agents are going to be the crossover between meme coins and NFTs, and if anyone that's involved in NFTs is going to be looking mostly at AI. As a trader perspective, it doesn't matter if I agree or not with the market, it just matters that the market's there, and AI agents really do have a market, right? Some of the top AI agents have like 150 million in market cap for just one AI agent. It doesn't really do anything. And people are trading this every day, and there's like a real liquid market for it, more liquid than NFTs, right? But it acts as an NFT anyway because it's still just a market of that particular one thing. So this is kind of curious, and we're starting to research into this now. In NFTs in general, there's curious that people are starting to bake one of ones into collections that have multiples. So it's not like they're making just like 20 one of ones. It's like there's a 4,000, but within that 4,000, there's more one of ones. That's kind of sports cardy style where you get some sort of like reverse prism break of a Patrick Mahomes versus all the other ones. Curious. I really like what Courtyard has been doing with actual real world assets with the cards. You send in the real world card. It's already been graded by an external third party that has like 20 years worth of trust, like PSA or Beckett. They'll then NFTify the card. That card can then be traded basically as an option at that point. And then if you really want the card, you can burn the NFT and get the real life card. That's really cool. I don't know why more things don't do that. I think that there could be a market there for like shoes and watches and all that sort of RWA stuff, because there's third-party authentication services that already exist for that for years. So they could just double down with those, I reckon. So that's interesting in RWA type stuff that we're looking into as well. Apart from that, I guess it's just seeing that NFTs actually held a reasonable amount of stability in the recent, like, let's say last month of crashing down. It's not that they haven't dropped all in price, but the floors haven't really been that affected in a lot of them. And that's probably because we've seen a rise in the lending markets in general. So people, instead of having to sell them, they can then just get a bit of capital for them and kind of maybe ride out a storm. So that's curious if that keeps expanding. I hope it does keep expanding. But EVM, I think lending is really dominating the day right now, definitely over Solana lending, which is where we're obviously a huge player as well, just because of the type of audience again, right? The borrower type that comes or buys and trades on Solana will be absolutely different that does on EVM, right? So, and they've got a very different appetite of risk and what they want to do with things. Doesn't mean that you can't trade against them, it just means you have to know what they want to do with their money. So yeah, EVM, I think lending in terms of NFTs is winning the day.
Nice. This is probably one of the last topics we're gonna cover before we're gonna dial off. But Gondi, like if you think about the quote assets in which loans are being denominated, being USDC or ETH, it also tends to be somewhat of an indicator. If I would look at your growth over the past months, years, it almost seems like there hasn't been some sort of a downtrend or bear market. Your guys' TVL has only been increasing, especially in this market, which is exceptional. If you're looking at today's loans, how do you see the next 6 months? Is it going to be up only? Have we seen the bottom? Like, how do you see this? And do you see this translated into the loans you guys are underwriting or writing?
Yeah, so I think to your point, like what we see on Gondi and the loans that we see coming in and out, in many ways, is a reflection of the market. What we try to do from the team itself is just educate more people that there's liquidity, how Gondi works, and how the tool is available. But many of the trends that we see are driven by external factors. So, for example, every time there's a big drop in BTC or ETH, we get a handful of requests of people looking for USDC loans because they think it's a great opportunity to buy the dip and go long BTC or ETH. A year ago, we had a lot of people who were trying to participate more actively on Blast, on things like Etherfi. So when those protocols had a lot of attention and a lot of activity, we got a lot of demand for loans in ETH. So it really depends, I guess, like what's going on within the crypto universe, and there's a lot of external factors that drive demand, either in ETH or USDC, depending on what bets people want to make.
Great. Maybe last one. The concept of floor is often hated or not liked, especially in the art space. If you had to give it a different name, what would it be? Maybe you, Danny, first. Got a different name for it? Should we stop using floors?
Yeah, but it wouldn't be a fancy name. It would be area of active liquidity. So you can acronymize that if you want.
Good. Burga, should we call it best bid on Gondi?
That sounds great.
I wouldn't complain about that.
All right, good stuff. Well, guys, so thank you so much for joining this this session. Super interesting. Again, kudos on what you guys have built. You've been in an up-only market when it comes to TVL, and I'm super excited to see what the future brings. Danny, thank you very much for your insights. You know, our in-house power user, we're very proud of you, and honestly, I can't wait what's going to be next for us in the next few months and years together. Have a good one, guys. Speak later.
Thanks. Have a good one.
Thank you, Stef. Thank you, everyone. Thanks for having us. Bye. Have a good one.